A new year always brings new expectations, but the Reno-Sparks housing market is starting 2026 with some very familiar questions. Are prices finally adjusting? Are buyers stepping back in, or are they stepping out? You don't want to miss this. Let's go.
Assist to sell way smarter.
Hello, everybody, and welcome back, and thanks for joining us for this edition of the Reno-Sparks Real Estate Market Update Show, this time for January 2026. First of the new year. So happy new year to all of you, and thanks for joining us. If you could do me a favor, hit that subscribe button and that like button down below. Sure does help us get this video out to as many people as possible. This is for the Reno-Sparks metro area and market stats, and it's for single family residential properties, basically houses, townhomes, and condos. Does not include multifamily, vacant land, things like that. Let's take a quick look at the first chart, and I'll explain how this works and what you're looking at. In this yellow box right up here where it says 6.2%, that's the main data point we'll be discussing. And over here you can see December of 2024. Now, even though this is the January market update, as I record this, it's early January, so most of the stats are through the very end of December 2025. Now, the reason it says December 2024 is we want to give you an apples to apples comparison, so we compare it to the month in the previous year, in this case, December of 2024. And of course, in the middle is the difference in the two numbers. Now, most of these charts go back about a decade. And of course, if it's different, I'll let you know. So the first chart we always look at is mortgage rates. Why? Because it has the biggest impact on the overall market, and you'll see why in the coming charts and stats. Right now, we're sitting at 6.2%, which is actually down nearly 8% from last year. We're at 6.7%. So good trends there. We're starting to see some relief in mortgage rates. Now, I get the question all the time, where do you see mortgage rates in 2026? And spoiler alert, I do see them dropping a little bit, but they're going to be most likely in the low sixes range for at least the first 3 to 6 months of the year. And obviously, depending on economic conditions, we may see them drop. That leads us to our next chart, which is the median price. Now, this tends to get the most publicity in the newspaper and on blogs and other places. Is what's the median sales price in Reno-Sparks? It's $547,945, which is actually up just barely from last year. We're sitting at $546,250. Now, this is Reno-Sparks combined, and this is condos and houses and everything combined. So if you were to back out Sparks, Reno would be a little bit higher and vice versa. And again, just like the mortgage rate, where we see this channel going on here, we have the same thing happening in prices. Prices really aren't doing much of anything there. And a bit of a sideways pattern. Now, why do mortgage payments and the median price matter? Because that gives you your average mortgage payment. In this case, $3,876, which is actually down 4.4% from last year. We're at $4,056. And that all leads up to affordability. Now, this chart you see up here, we're sitting at 63, which is up. So that's a good thing. You want affordability to be higher. That means things are more affordable. It's up 16.7% from where it was last year at 54. Now, the way you look at this number is essentially a percentage. This is the percentage a median income earner can afford of the median price in terms of percentage. So you really want to see this number get to at least 80 and above, 85, 90, and then you start to get some much better affordability, and that's usually when the market starts to move. Now let's shift into actual listings in this market. We're going to look at new listings. Now these are homes that people just put up their hand and said, yep, I'm ready to sell my house in the month of December 2025. 296, basically flat from last year at 295. But where it gets interesting is the new listings by price. Now, each one of these charts, I'm going to do listings as just the overall, and then we're going to do it by price. And you'll see along the bottom here, 100 to 200, 2 to 3, 3 to 4, 4 to 5, and so on. So these are all the different price ranges. You can see the number of sales on the side over here. Right now, the majority of listings are coming on the market between 4 and 5, 5 and 6, and then up to about 650, 700 before it falls off quite a bit at the upper end price range. Now, let's take a look at active. Now, the difference between new and active, these are the homes, if you're looking at at buying a home that are on the market today that you can go look at and potentially buy. If you're selling, this is your direct competition, 969, which is down 13.6% from this time last year. We're at 1,121. So that's something we're definitely keeping an eye on. It's a little bit lower inventory this year than last. And if you look at active by price, and I want you to keep an eye on the upper end of this price range, and this is upper end meaning 750,000 to about $1.5 million plus. Most of the active inventory is in this 450 up to $1.5 million plus. Now let's look at closed. These are sold homes. 483 homes sold, which is up 12.1% from last year. We're at 431. Now, what I like to point out on this chart is look at the activity and the total number of sales that took place back in 16, 17, 18, 19, and so on. You can see significantly more homes until January of 2022 and beyond, significantly lower than they were back just a few years ago. But here's where it gets interesting, is closed by price, number of homes sold by different price ranges. And I want to compare that to active by price. And as you can see, we still have this issue in the upper end price range where we have a lot more actives, not nearly as many sales in the upper end price range. Once again, something to keep a close eye on. Now, this is a chart. Now, I know it says 0 up here, and the reason it says 0 is as I pulled this data, it was early January, so nothing really had closed in January yet. It was only the first few days of January, so it shows 0. But total sales in 2025, total as of through the end of December, 5,692. Now that's a concerning number. And, we talked about those canary in the coal mine numbers. I'm going to go over a few of them right here. And the first one is closed sales. Closed sales are down significantly. And you can see they really started to crater in January of 2022. And what happened in January of 2022? That's right. It corresponds almost exactly with mortgage rates popping up. As mortgage rates popped up, closings started to fall because homes became, you guessed it, less affordable, right? What happened January of 2022? Affordability started to fall significantly and homes became less and less affordable, and mortgage payments shot through the roof. So all of these, and this is why I showed you the mortgage rates initially and said it had the biggest influence on the overall market, and you can see why. So what you would expect to see is around 6,500 to 7,500 sales is about average over the last 10 to 15 plus years. And really the last 2 or 3 years, we've barely getting above 5,000, 5,600. So significantly lower than we expect. And keep in mind, if you're familiar with this area, we're growing like crazy. There's homes being built everywhere. There's population moving in, and we're actually seeing sales fall. So that's something to keep an eye on. The next canary in the coal mine, or what's to come, is supply of inventory. So this, obviously, as you can see by the chart, fluctuates quite a bit. What this means is the number of homes on the market at the current sell-through rate. How many months would the current supply last? So, for example, if you had 1,000 homes on the market and you sold 500 a month on average, you'd have 2 months of inventory. You like to see, for a stable market, you'd like to see this get at least 3.5 and up. You don't really want to see this number go over like 5 or 6, 7 months of inventory, because then things really start to slow down. Right now we're at 2, which again is not all that unique for this time of year. You generally see much lower supply this time of year, just given the holidays in November and December and even into early January. So we'll keep a very close eye on that. We're down 22% from this time last year. We had 2.6. And the last chart we'll go over today is unsold listings. So these are homes that went on the market and a seller said, yep, a homeowner said, I want to put my home on the market and sell it, and it never sold. 192, which is dead even from this time last year. We're at 192. So nothing significant there, but I certainly want to keep an eye on that, because the more homes go unsold, the tighter the market gets, and you usually start to see prices fall a bit. With all that said, what does this mean for you? Well, if you're thinking about selling your home, just understand that prices haven't gone anywhere really in the last few years. They've stayed relatively consistent. So if you look at a home that might have sold 3, 6 months, 9 months, a year ago, and you say, well, I want to get a little bit more for mine, chances are you're probably not going to get much more. It's going to be similar to what you got a year, even 2 years ago. For buying, there is good news on the horizon. We're starting to see, as I mentioned before, mortgage payments come back a little bit. We're starting to see affordability come back. And most importantly, we're starting to see mortgage rates soften up a bit. If you have questions about your specific property, or maybe want to get a valuation, you can visit our website over here at or renohomes.com. Right down here where it says you want to know your home value, you can just click that button, find out now, enter an address. Maybe it's your home or a home you're thinking about buying or an investment property or something like that. It's a great place to start to get a value on your property. And of course, if you're thinking of selling, there's no better value right here in the Reno-Sparks area than Assist to Sell. We'll sell your home for only $49.95, and if your home is over $500,000, it's only 1%. And of course, if you're buying a home, we do have some buyer programs for you as well. So thank you for joining us. Hit that subscribe button. We wish you nothing but the best in the month of January, and we hope your 2026 is off to a great start. We'll see you next month right here on the Reno-Sparks Real Estate Market Update Show. Bye-bye.
Assist to sell way smarter.